Hello everyone, welcome to my channel. My name is Aseem Singhal. I am a full-time trader, and today I'm going to tell you how I use Bollinger Bands to take both short and long entries, and I use it by taking two kinds of trades. One is a more conservative kind of a trade, that means it has more probability that it will go in my favor, and the other one is a more aggressive trade where I even take 1:3 kind of a trade. That means my risk to reward is at least 1:3, and that I've seen generally works out on a momentum kind of stocks. But we'll discuss all our entries, exits, what is our stop loss, what is our target. But before we go further, make sure that you like this video and subscribe to my channel. So let's start today's video. So let us discuss about this strategy. In this, I use the normal Bollinger Bands. So what is Bollinger Band? Bollinger Band basically tells you what is the volatility in the particular stock. If you see that the Bollinger Band is too wide, so Bollinger Band has two levels, the upper level and the lower level. If you find that the Bollinger Band levels are too wide, that means that the stock is pretty volatile. On the other hand, if we find that the Bollinger Band is very squeezed out, that means the stock is not too volatile. It is currently in a sideways phase. So how we're going to use this is, first we will look at what is the direction Bollinger Bands is going, whether it is pointing towards the up or towards the down. That will give us the indication of the direction. If the Bollinger Bands is pointing towards upside, that means we are going to go for a long trade. If Bollinger Bands is pointing towards the downside, we will look for the short entry. Now, as I said, we will be taking two kinds of entries. The first kind of entry is a more conservative entry. This generally happens when we find, so for the first condition is that the Bollinger Band is upwards, and then we find the candle actually touch the upper Bollinger Band, and then it retraces back. So there's a pullback, and it comes to the mean. So it comes to the middle line of the Bollinger Band. This is where it gets its support, and we find a green candle. When this happens, we can take an entry, so we can do a buying entry, and our stop loss can either be the low of this candle or it can be the lower Bollinger Band, and we can easily put a 1:2 risk to reward. That means whatever is our stop loss, we can multiply that by 2, and that can be our target. And most of the times you will see that your target will get hit because this is a very safe entry by taking entry on the pullback. On the other hand, if you want to go for an aggressive entry, this will generally happen when Bollinger Bands is pointing up and it's very steeply pointing up. We also find that the candle closes above the Bollinger Band and there is enough momentum in it. In this case, we will directly take the entry. We will not wait for the pullback, because we have seen many times when there is good momentum and when the Bollinger Bands is pointing up, the stock keeps going up. So we will actually take the entry right then, and our risk to reward in this case will be 1:3. Our stop loss can be the low of that particular candle. So these were the examples of the long entry. Similar example will be for the short entry. So again, now we want the Bollinger Bands to be pointing downwards. We want the candle to touch the lower Bollinger Band and then retrace back or make a pullback and takes a resistance on the mean. Once we see that and we see a red candle, that is the time we can sell it, and again we can easily go for a 1:2 kind of a trade. This is again the pullback entry, and this is more or less more profitable because we can find that the probability of profit is much more. On the other hand, if we want to take an aggressive entry, we want the Bollinger Bands to be very steeply pointing downwards, and if the candle closes below the Bollinger Band, we will take the entry right then, we'll sell it, and again we'll go for at least 1:3 kind of a trade. So we'll discuss about all this now on the laptop. So now let us see how to use the Bollinger Band strategy. I will be showing you both the pullback strategy and the aggressive strategy. So in this PPT, I will show you how to use the Bollinger Bands and how do we identify the trends first, whether it's a bullish market or the bearish market, and finally we'll look at some examples, some bullish examples and some bearish examples. When I use this indicator, basically this is a statistical indicator, and you will notice that there are three lines. The middle line is the moving average, the upper line is the 2 standard deviation, and the lower line is a -2 standard deviation. Basically this tells us, as per statistics, there are 95% chances that the stock will revert to its mean. That means if the stock goes up, it will come down, and if it touches the bottom line, it will come up. So we are actually going to use this same idea in our strategy, which is the pullback strategy. So this is how I add this indicator. All you have to do is go to your any broker or your charting platform and just type Bollinger Bands, and once you do that, you'll see that you'll get Bollinger Bands, and you can just add it. So let us first see how can we identify the trend, because we will only be trading in the trend. So whatever is the trend, we'll trade in the same direction. So for that, we will be looking at the middle line, which is the moving average. And if we see that the moving average is going upwards, so as you can see here, the moving average is clearly going upwards. In that case, we are only going to take the buying trade because this is an upward trend. Similarly, if you see that the middle line is very flat, that means it is neither going up or down, it is almost flat. In that case, we will not be taking a trade because this is a strategy which works in trending markets. So if we find a stock which is really going very flat, we will skip that stock and we will trade in some other stock. Let me also show you how the downtrend would look like. So as you can see here, the moving average is clearly pointing to the downward direction. That means the stock is in a very good downtrend. So we will take the trade only in the selling direction. That means we will only take selling trades using this strategy. So now let us see some examples. So let me start with the strategy first, and then we look at some buying and selling examples. So this strategy you can apply in any time frame. You can use 5 minutes, 15 minutes or 30 minutes. And we are looking for a pullback. So basically when the stock touches or goes up above the upper channel, the upper Bollinger Band, and then it comes back and rests or takes a support in the middle line, that is the time we are going to take the buying entry. And you can do it both intraday as well as positional. If you have a smaller time frame like 3 minutes or 5 minutes, then you will do it probably on intraday. If you're doing on a 15 minutes or 30 minutes, then we will be doing more on a positional basis. So let us see some examples now. The first example I'm showing is for Gujarat Narmada, and I'm doing it on a 15 minutes time frame. So the first thing that we want to see is where is the middle line going, or the moving average, and we can clearly see that it is pointing upwards. So our first condition is true, that the trade is in an uptrend. That means now we are only looking for buying entry. So now let us see how and when we will get the buying entry. If you notice here, the stock actually went up. It went above the upper Bollinger Band. Now we are looking for the pullback, and you can see the stock actually came down. So this is the pullback. So our second condition is also done. The pullback is done. Our final condition is we are looking for a candle which takes support. Basically, it is taking support on this middle line, and we can clearly see that this green candle is taking that support. So based on that, we will take the entry here. So at the closing price, we will take the entry. This will be a buying entry, and we can put the stop loss as the previous swing. So this can be the previous swing stop loss. And we will take at least a 1:2 trade, if not more. And you can easily see that we made a profit of at least 1:2. So this is how we will take the buying trade. Let me show you one more example. I'm showing you example on a 30 minutes time frame this time on Ultratech Cement. Again, we can see that the stock is clearly going on the up direction. That means we are going to take an uptrend. That means we are going to take only a buying entry again. We are looking for a candle which touches or goes above the upper line, and then it takes a pullback. So it has taken the pullback, and this red candle is clearly taking support here. It is taking a support here. That means we will buy here, and we can keep a stop loss of the lower Bollinger Band. So this can be our stop loss, and you can see after the entry, the stock went up very quickly. In fact, it gave us almost a 1:4 or 1:5 trade. So this is how we will take long entries, and this is entry on a pullback. Let me now show you an example of selling as well. So for selling example, the first condition is we want the moving average to be pointing downwards. So we can clearly see that the moving average is pointing downwards. Now we are looking for a pullback, and as you can see, this big red candle, it closed below the bottom Bollinger Band, and then it gave a pullback. And again, these two candles are taking support on this middle line. So we will take a selling entry here. This is our selling price. We will put the Bollinger Band as our stop loss, and you can see that clearly we made a 1:2 profit. Most of the times you will notice that yes, once you get a very good entry, you will get profits very quickly, and the minimum profit that we will get is 1:2. Let us take one more example. Again, I'm showing you on a bearish example now. We can clearly see that the stock is going down. So we are looking for a selling entry. Here, the stock has already gone below the lower line. So now we are looking for a pullback, and this is where it took the pullback. This is where it is getting the resistance. So we will wait for the candle close. This is the candle close. So we will take the entry here. This is the selling entry that we are taking. We will keep the previous swing as the stop loss. And you can easily see that again, we get at least a 1:2 trade. In fact, the stock kept going down. It gave us a very good trade. So this is how we are going to take trades using this strategy, but this is a pullback method. And this is generally a more safer method, and because the stop loss is very small. But now I will show you which is an aggressive method, because now this time we are going to take a trade directly on the breakout. And since it's aggressive, our profit we keep is 1:1 only. But the chances of the aggressive trade hitting your stop loss is higher. That means the accuracy is low for this, but the accuracy of the pullback trade is much higher. So in this, we will take a trade when the stock actually goes above the upper Bollinger Band and it has gone up very quickly. So let me show you some examples to show what I mean. In this, you can see in this green candle that the stock went up very quickly above the upper Bollinger Band. That means there is good momentum. So I'm going to buy here only. So this is the entry price and my stop loss is the previous swing. So this is my stop loss. And as I said, in this kind of a trade, I generally take 1:1 kind of a risk reward, and we made a profit here. So this could have been my target. So we would have exit. So this could have been an aggressive trade. But let me show you in the same example how I could have taken a pullback entry. So now you can see that the stock went up. Now we are waiting for a pullback. It has given us a pullback. It is even taking the support here. So we will buy here and we will put the stop loss as the previous swing. This can be a stop loss. And again, you can see we got a 1:2 trade. 1:2 trade. So as we said, the pullback entry, generally you will get a better accuracy as well as better risk to reward. In pullback, we got 1:2, whereas if we had taken an aggressive entry, we only try for 1:1. Let me show you one more example, and then we can see some examples directly on Nifty, Banknifty as well. So in this, I'm showing you an example in which the stock again went up very quickly above the upper Bollinger Band. That means we are trying to take a breakout trade. We will buy here at the closing price. We will put the stop loss as the swing, which is the low price of the candle. This can be my stop loss, and you can clearly see that the stock went up very quickly. So either you can go for 1:1 or 1:2 risk to reward, or you can go for trailing as well. So that could have been one kind of a trade. And a lot of them, you will notice that when we go for aggressive entry, our target and profit will come very quickly. But when we go for a pullback entry, our targets generally come after a little bit of time. Now let me show you some examples on Nifty and Bank Nifty as well. Let us see some examples on Nifty and Bank Nifty now. First, I'm showing you Nifty. I've added a Nifty chart on a 15 minutes time frame, and I've also added the Bollinger Bands. So again, let us first look what is the general trend. As we can see, the trend is going upwards. So we are looking for a buying entry now. So if you see, this candle touched the upper Bollinger Band and then it gave a pullback, and clearly this candle, the green candle, is taking a support on the middle line. So we will do a buying entry here. So this is our entry price. This is the buying entry, and we can go for a stop loss of this point. So this can be a stop loss. And as you can see, easily we have made a profit of 1:2. So that could have been our first trade. But you'll see that in the same stock, we can get a lot of entries one after the other. So let's look at the second entry again. The Nifty has touched the upper Bollinger Band. Again, it has taken a pullback, and again, this candle is taking the support. So we can again go for a buying entry here, and we can go for a very small stop loss. So as you can see, the stop loss is maybe only about 20 points. And the stock went up almost 120 points. So this was 1:6 trade. So almost 100 points of profit in Nifty is almost rupees 5,000 profit on only one lot. So this is the kind of profit that we can get if we trade correctly. Let me show you one more example. This time I'll show you the selling example. We can clearly see that the Nifty started to go down. It has gone below the lower Bollinger Band. It has taken a pullback. And we can see two candles again taking resistance on the middle line. So we can take the entry here. This can be our entry price. So our entry is somewhere around 18,760. 18,760 is the entry, somewhere here. And our stop loss can be around this point, which is around 18,800. So that can be my stop loss. That means I have a risk of almost 40 points. and you can see that the Nifty fell very quickly after that, almost going to 18,360, almost going to 18,360. That means in this trade we would have made a profit of 400 points. 400 points in Nifty with only one lot is 20,000 rupees of profit. So this is the kind of trades that we can get using this strategy. And again, what we are looking for is the first thing, we are looking for the trend. So we can see that the Nifty was going down. The second thing is we are looking for a pullback. So we can see that the pullback happened here. Then third thing is we are looking for a support or resistance on the middle line. And that is when we take an entry with a very small stop loss. So those were some of the trades on Nifty. Now let us see Banknifty as well. So now let me show you some example on Banknifty as well. I have already added the Banknifty chart here on a 15 minutes time frame, and the Bollinger Bands have been added. Again, let us look where all we would have gotten an entry. Again, clearly we can see that the Banknifty is going up, so we are looking for a long entry. The first time the Banknifty actually gave a pullback was somewhere here, but this time you'll notice that there is no green candle here. There is no green candle, so there we will not get any entry. In fact, that's a good thing because Banknifty kept falling, so we did not get any entry here. So let us see if we would have gotten an entry after that. Again, Banknifty went up, and again this time it fell, but since it did not touch the upper Bollinger Bands, again we will not take the entry because all the conditions have to meet. The first condition is obviously that we have to find the trend, so that is the first condition. The second condition is that Banknifty should touch the upper Bollinger Band if you're looking for a buying entry. The third condition is that there should be a pullback like this. So this is the third condition, but with the pullback there should be some candle which is taking support on this. So all these conditions, when they meet, only then we will take an entry. So till now we have not got any entry. Let us check if we get any entry after that. Now you will notice that now you will start getting entries. So if you see here, again Banknifty went above the Bollinger Band, so we are looking for a pullback. We've got a pullback, and this candle is actually taking support on this middle line. So we will buy here. This will be our buying entry with this as the stop loss, and easily we can see we made a profit of 1:2. So this was my first trade on Banknifty. Let me see if we get any more trades on Banknifty. And you can see here that we could have also got a selling trade. Clearly Banknifty is now showing downward trend with the moving average. So now we are looking for a pullback again. We can see all these candles are closing below the lower band. We're waiting for a pullback. This is the pullback where this candle, the red candle, is touching this line. So we will take the entry here. This will be my entry. This is the selling entry with this as the stop loss. And we can again see that Banknifty fell down very quickly, giving us at least 1:5 or a 1:6 trade. So very important to notice that we will only take entries when all the conditions are true, because then my accuracy will increase and the probability of profit will increase significantly. So I hope you liked the video. You saw how we can use Bollinger Bands to take both a conservative entry using the pullback method or a very aggressive entry using the breakout method. If you like the video, please make sure that you like this video and subscribe to my channel, and I'll see you in my next video.